Welcome back to the update. Today we're looking at what appears to be a cheat code hidden in the recent volatility. These repeatable mechanics look random, but the data tells a different story.
In Breaking Analysis today, we examine how these strategies promise no risk, yet deliver substantial gains, as you can see here. Breaking update on the markets. The vault saw record inflows, pushing the price of ounces up significantly despite a wave of cancellations earlier this morning.
We have a major update regarding the recent exploit. Our analysis confirms that the fees dramatically outweighed the gains.
Breaking update, everyone. The order book data is signaling a massive shift. Despite the wall of cancel orders, the vault numbers are spiking. We're looking at record ounces claimed this quarter. Our investigation reveals that regulators are now looking closely at these audit logs. The data clearly shows fees far outweighing the reported gains.
The bottom line is this: that small percentage cut highlighted here acts as a regulatory permission slip. It allows them to keep moving forward without disruption.
We've analyzed the data, and the results are clear. When you look at the gains versus the fee, you'll see you only pay a tiny cut.
We are seeing unprecedented movement in the vault data. Claims are up, ounces traded are soaring, and the live order book confirms this rally has serious legs. We're tracking the timeline of these transactions, revealing exactly when and where the fees hit. When you look at the comparison, it's clear who pays the price. In today's Breaking Analysis, we're seeing record ounces enter the vault. This data confirms the massive cancel wall, driving down outstanding claims across the board. We've been analyzing these documents, and what we found truly sounds like fiction. The fees alone are staggering compared to the actual gains. Breaking news this hour: the order book saw a record spike just moments ago. We're tracking the vault levels closely, but analysts are already calling this a major turning point. We're tracking a significant story today. The data clearly shows that markets have exploits. We need to look closely at the fees versus the actual gains. Enough with the metaphors. The technique is called dynamic canceling, and as you can see on the screen, we're going to show you exactly how it works. Welcome to the breakdown. We've opened the case file, and here is the roadmap: evidence, the mechanism, the paperwork trail, and finally, the physical reality. We've opened the case file on today's market movements. We'll examine the evidence, the underlying mechanism, the paperwork involved, and the physical assets. Breaking update on the market claims analysis. We need to look closely at the definition of a claim, especially when comparing the significant difference between the fees and the gains realized. Let's dive right into the key term everyone is watching: the order book. We're seeing unprecedented movement in vault claims and ounces today. We have a breaking update on the market data. Let's clarify some definitions, starting with the order book and how it affects gains versus fees. The key indicator here is the sudden spike in the order book wall right before the cancellation. This directly impacts them. Today we're asking the question: why people miss it? When we look closely at the documents, it's clear the fees are canceling out the gains. The key development is this massive spike in the cancellation queue, clearing the path for the vault rebalance we discussed earlier. We're tracking a fast spike example in the market today. While the fees are visible here, the gains have absolutely overshadowed them, indicating a major shift. Breaking analysis today. The recent volatility, especially with these vault claims, indicates a significant shift. The data confirms a massive spike in the order book, suggesting this. The data often feels random, but look closer at the audit logs. We found a consistent pattern where the fees dramatically outweigh the reported gains. Our investigation reveals a massive shift. The vault claims are up, but the actual ounces available are declining rapidly across the board. This is your breaking market update. We're diving deep into the engineered environment, analyzing the timelines and comparing the substantial fees against the actual gains realized. Now look at this wick and slam right here. This isn't just normal volatility. This is a recognizable signature of institutional activity. Welcome back to the update. We're tracking the lever idea closely. As you can see from the timeline and the audit logs, the fees are significant. Let's look at the data. The order book shows significant change. After that massive cancel event, the vault saw unprecedented inflows, pushing the price per ounce up significantly. Welcome back. We're looking at how the records actually work. As you can see on this timeline, when we compare the fees against the actual gains, the picture becomes very clear. We have a critical update on the market wall. The order book is lighting up with massive claims against the vault. We're talking millions of ounces being pulled. Let's dive right into the timeline update. When we compare the fees against the actual gains, the discrepancy is clear. We have a major update regarding the recent volatility. The order book clearly shows a shift away from traditional assets. The results of our repeatability test are clear. Looking closely at the audit logs, the fee structure is completely overshadowed by the gains.
This breaking update shows the order book completely drying up. And if you look at the vault data, the number of claims against existing ounces has spiked dramatically in the last hour.
As you can see here in the audit log, the system categorized these as accidents. But when we look closely at the fees versus the actual gains, a different picture emerges. Breaking news in our ongoing investigation. The data coming across the wire regarding these vaulted claims simply doesn't match the reported ounces.
This breaking update focuses on the cost of getting caught. As you can see from these documents, the timeline shows a clear pattern of exaggerated fees versus minimal gains.
We're seeing a massive influx in the order book, triggering circuit breakers across the board. The volume of claims hitting the vault is unprecedented. Welcome back. We're looking at the latest audit logs, and as you can see, the fees are significantly impacting overall gains. The data is moving fast. We're seeing a massive influx hitting the vault wall. Look at the claims versus the actual ounces available right now. This is a significant update for investors. We're asking the question, why are these hidden fees still embedded in your portfolio? Breaking update on the market stabilization efforts. The key data point is the rapid increase in the order book's cancel queue. If we look at the vault data in this market alert update, the key mechanic is the direct relationship between the vault reports and the outstanding claims. When we see this many ounces move, it confirms the pattern. Taking a look at the live ladder, you can see the bids stacking up down here, but watch this sell wall right here. This indicates potential spoofing as we head into the next session. Let's look at the ladder. We're seeing aggressive buying hitting this resistance wall, but look at the volume near the vault. The claims data suggests a breakout is imminent if this pace holds. In breaking news, the order book saw unprecedented activity, but look closely at the vault data. These claims, measured in ounces, we're tracking a major shift right now. The depth blocks on the order book show crowd behavior turning, especially around these key levels. Spoofing is creating a large fake order block you never intend to execute. The difference between displayed and real liquidity all comes down to intent.
A massive red sell wall just slammed into the order book at a key psychological level. This phantom supply is...
The mechanic is simple. The order book wall held firm, and with these vault claims coming in, we're seeing ounces stabilize right here. As we look at the order book, the depth blocks are showing significant shifts in crowd behavior. The vault claims are spiking, driving the price per ounce higher in early trading. Breaking down the update, the key movement is in the order book. We've tracked millions of ounces moving into the vault. While claims are up, the data shows we saw a significant event unfold on the order book. A massive sell wall, what we call phantom supply, appeared suddenly.
Let's look at the data. The wall of sells near the vault has been canceled, triggering a rush of claims. We could see ounces moving very quickly here.
We're seeing a rapid shift in the order book. These depth blocks indicate major institutional interest right at the 52-week high, which suggests continued momentum. The latest data confirms the surge in the order book. With claims hitting the vault this fast, the analysis shows this repeatable mechanic is now in play. This is a critical update on the market. The volume in the order book right here is signaling a major shift in investor sentiment that we need to watch closely. This is a critical update on the market. The order book shows a significant wall of cancellations. We're tracking the impact on the vault's total ounces and outstanding claims. Let's dive right into the charts. The order book is flashing green, but watch these resistance walls. Are the recent claims being canceled out? Can't. The latest data shows the order book hitting a major resistance wall. However, the sheer volume of these cancels is the real story. Breaking update on the market volatility. We've seen a huge influx of sell orders, but these depth blocks suggest a significant buy wall forming right at the 50-cent mark. Breaking update, we can confirm the wall was never meant to trade. The presence of this cancellation stamp is undeniable proof. In breaking news, we saw a massive phantom supply sell wall hit the order book, forcing bids to retract and the price to step down dramatically. This is the crucial update we've been waiting for. Look at the data. When we cross-reference the order book with the outstanding claims in the vault, the pattern becomes clear. The key takeaway is the depth blocks. See how the crowd behavior shifts dramatically as this wall appears and then cancels out.
Thus, this is the breaking update you need to see. The order book confirms the surge in vault claims. When we look at the total ounces and factor in these cancellations,
as you can see from the order book data here, the depth blocks are shifting rapidly. We're seeing major walls being canceled near the top, indicating a potential breakout. Let's look at the data. The order book shows a significant wall right here. Now watch if those claims hit the vault. More ounces mean a higher cancel rate. All right, diving straight into the charts. The order book is flashing green today, signaling a major shift in investor sentiment as we track these large block trades coming through. The key mechanic here is the interaction between the vault and these. And look at the live order book. The wall has effectively, as we zoom into the candlestick data, you can see the absorption here.
This indicates a shift in crowd behavior, despite the recent sell walls.
The key here is the order book wall. If we look at the vault data and the outstanding claims in ounces, the pattern is incredibly clear and repeatable. Taking a look at the charts, the order book clearly shows a shift in crowd behavior. These depth blocks highlight key levels where we're seeing significant movement in the candlesticks. Welcome back to the update. The key mechanic here is the order book wall. As you can see, if we look at the vault data and the recent claims in ounces, the pattern is highly repeatable. This rapid price rejection wasn't just technical. The order book replay shows a huge spoofing wall that vanished just as the wick formed. So how did this mechanic work? The order book shows a massive wall, but look here, it's instantly canceled, moving these claims directly into the vault, totaling thousands of ounces. Let's dive into the charts. The order book ladder clearly illustrates the institutional interest building right here at this key level.
We're seeing unprecedented volume in the order book. The spike in vault claims creates this wall, but the crucial metric is the cancellation rate on the outstanding ounces.
Breaking down the charts, the order book activity is unprecedented. We're seeing a massive influx of bids right here, indicating a major shift in crowd behavior. Let's dive into the mechanics. The sheer volume hitting the order book wall suggests institutional movement, but look at the vault data. It tells a different story about the actual ounces in play. This morning's breaking update shows the order book flashing green. We're seeing clear shifts in the accumulation zone, indicating a major move is imminent. Welcome back to the update. The order book shows a massive wall at the 10,000 level. Despite the recent vault claims, we're seeing ounces move.
As you can see here, this phantom supply near the vault level absolutely crushed the bids, pushing the price down dramatically. Bids are evaporating.
Lifetime, size to depth, cancel rate. We're tracking a breaking update on market volatility. Our detection checklist analyzes order lifetime, size to depth, and
When we zoom in here, the wall vanishes. This official cancel stamp confirms the order wasn't intended for trade execution. As we zoom into the candlestick chart, the order book ladder shows a massive cancel wall forming right at the key resistance level. The crowd behavior is shifting rapidly.
this breaking legal update confirms the enforceability of the vault claims. We anticipate a volatile session as the market digests the full opinion.
In a breaking update, the gains are significantly outpacing the new regulatory fees. This distribution model suggests sustained growth despite the new costs.
Turning now to the legal layer, the recent court decision significantly impacts the order book. We're seeing major movement in the vault claims, so keep a close eye on those ounces.
Let's dive into these documents. The timeline suggests a clear path: pay and continue. When we examine the projected gains again.
Turning to governance, this agreement card highlights how the pay and continue mechanism ensures market continuity, especially concerning these outstanding claims and the main vault. As we look at the documents, the timeline clearly shows the pay and continue structure. The critical comparison here is the fee.
We're diving deep to the legal layer today, analyzing these key barriers which seem to be shifting the entire order book. The vault claims are currently astronomical. The data confirms the strategy. Pay the initial toll to continue, which vaults these ounces immediately.
Breaking down the legal layer quickly, the key change affects how assets are categorized in the vault. This speeds up your claims processing, securing the ounces immediately.
We have a market where this morning. Looking at these documents, the crucial question is the discrepancy between the fees and the potential gains.
As you can see on the bar chart, when the fine is predictable, it essentially becomes a toll. And predictable costs, unfortunately, normalize the behavior. Breaking analysis on the filings just released, we're seeing a clear pay-to-continue model emerging. These fees are acting like a toll, dramatically impacting the net gains shown here on the chart. In this breaking update, we're analyzing the legal layer. The order book shows significant movement, while the recent claims are impacting the vault ounces. Here's what this means for the market.
Let's look at the documents. We've highlighted the key clauses here, showing this pay and commute projected fees against.
When we look at the regulatory wall and the recent cancellation orders, Section 3 specifically addresses how the remaining ounces in the vault are handled for claims.
We're tracking a major development. While the legal documents are complex, the data is clear. Our analysis shows projected gains far exceeding the standard fees.
The critical distinction here lies in the legal firewall. As you can see, the order book claims are separate from the physical vault holdings. Our investigation into these documents highlights the critical choice here. As you can see, the fees drastically outweigh the gains. We have a major legal update in impacting the market. This ruling clarifies the status of digital assets backing the vault.
Let's look at the breakdown. Our analysis shows a clear path forward: pay and continue. The projected gains are. So is it a fine or is it a toll? When the cost becomes predictable, businesses simply factor it in, normalizing the behavior we wanted to prevent.
It's here. We've highlighted the key clauses here. It's a clear pay and continue model, but when we weigh the fees against gains,
Let's dive into the legal layer. The key terms are cancel and order book. This created a significant wall, shifting focus to we're looking at the breakdown of these new agreements. As you can see, the flowchart clearly shows the pay and continue structure, which is a breaking update on the regulatory front. We're cutting through the noise to give you the practical guidance you need on these new legal developments.
We have a critical update on the market structure. The diagrams clearly illustrate the current imbalance between the vault holdings and the outstanding claims. Breaking down the latest figures, it's clear the incentives are shifting. The volume spikes correlate directly with the regulatory signals we discussed. The data is clear, the confidence gauge is spiking, yet these risk nodes are flashing red. This leads us directly to the core hypothesis we're tracking today.
This confidence gauge for metals is signaling something the broader market can no longer ignore. We are seeing unprecedented movement in the vault holdings.
We're tracking these flow arrows across the heat map. The key hypothesis here is how these incentives are driving the price per ounce, despite the overall risk assessment. Let's look at the incentives. The data wall shows the order book remains strong. Despite the volatility, the signals from the vault balances suggest
The data suggests a major shift. While the signals look strong, we need to consider the rising risk factors before.
Looking at the incentives here, the signals are clear. The order book suggests a significant shift in claims versus the actual ounces in the vault. We have a breaking update on the global markets. As you can see, the confidence gauge is reacting strongly to the latest metal flows. Our breaking update on the markets, the recent surge in claims is hitting the order book hard, but the vault still holds significant ounces. We see the resistance wall holding for now.
as we zoom into the metals market, you can see the signal waves radiating outward. Our confidence gauge is high, but look at these risk nodes lighting up.
While the documented mechanism is clear, the incentive theory is where the real question lies. And that, fundamentally, is our hypothesis.
The data streams confirm the spike in activity around the metals vault. This brings us to our main hypothesis regarding the sudden appearance of these global risk nodes.
As you can see on the chart, the signals point towards sustained demand. Underlying incentives for holding physical ounces haven't changed. Welcome back to the update. As we look at the global grid, the data shows significant movement in the metals market. This brings us to our main hypothesis regarding the new incentives. The macro argument here is grounded firmly in these market signals. If we look at the incentives driving this supply chart, the analysis is quite clear.
As we zoom into the macro map, the signal waves confirm the shift. Our confidence gauge is peaking, highlighting a clear hypothesis on the upcoming incentives.
Welcome back to Market Signals Decoded. We're looking at the recent shifts in the order book and how that affects the vault claims. It really comes down to these core incentives. Welcome back to the update. We are tracking a major shift in the metals market. As you can see in signals, the key takeaway from the data wall is the incentive structure. While the order book looks strong, the actual vault claims tell a slightly different story for these ounces. Let's reframe this. Forget the daily price moves. The key indicator now is availability. Look at the shrinking vault inventory and these rising claims. Forget the daily price swings. The real issue is availability. These charts show the order book shrinking while vault claims and outstanding ounces continue to rise. Let's look at the plumbing diagram. The difference between the paper claims up here and the actual vaulted ounces down here has never been starker. Let's analyze the physical layer. Visibility is everything. When we track the logistics and the inventory in the vault, that's where we find the market advantage. This breaking update shows the truth about silver. Vault inventories are dropping while paper claims surge. This explains the rising premiums you're seeing. We've been focused on the recent price volatility, but that's not the real story here. The key issue, as these charts show, is availability. We're seeing unprecedented movement in the silver market. The inventory counters are ticking up, but look closely at the physical metal versus the paper claims. Everyone is asking about the price, but that's not the critical factor right now. The real issue, the practical concern, is availability. While the paper claims are skyrocketing, the physical metal is becoming incredibly scarce. That's pushing premiums through the roof. Warning, we're tracking a critical shift from price concerns to physical availability. The data on the wall, particularly the claims versus the vault supply, is unprecedented.
Breaking update on the physical silver market. As you can see, inventory counters are ticking up, but look at the claims versus the actual metal in the vault.
Forget the sticker price for a moment. What we should be analyzing is the dwindling availability in the vaults and the impact on claims.
This is the critical update. The divergence between paper claims and physical metal is expanding. The vault is strained, and that scarcity is driving these premiums higher.
We've been focused heavily on the spot price, but the real story here is availability. If we look at the order book and the vault levels,
Let's look at the data. The gap between these paper claims and the actual physical metal is widening fast. We are seeing signs of a critical shortage. It's not the price we should be watching, it's the availability. And the latest figures show a significant shift in the order book.
We're tracking the inventory counters, which are ticking rapidly. This highlights the disconnect in the vault, where paper claims far outweigh the physical metal. Premiums are spiking.
We've seen the price fluctuate based on the order book wall, but the real question isn't the current price, it's availability.
Look at the breaking news in the commodities market. The latest data shows a massive imbalance between paper claims and the physical ounces held in the vault.
So let's move past the sticker price debate for a moment. The key factor now, what viewers need to know, is the sudden change in market availability. Breaking update on silver. The inventory counters are spiking, but when we look behind the curtain, the actual metal in the vaults is becoming increasingly scarce, driving up those premiums. We're moving past the sticker shock because the real issue facing consumers and investors right now is centered entirely on availability. This plumbing diagram is key. The amount of paper claims vastly outweighs the actual metal in the vault, driving up the premium.
it's no longer just about the price. When we look at the order book data, the critical factor moving forward is clearly availability.
The recent shifts in the order book and the overwhelming number of claims really highlight the instability of the current vault system. Looking at the cultural evidence, the cancel and wall trends reinforce the systemic argument we've been tracking in the order books. The real question now, the pivot, is survival. We're looking at the raw data right now. As you can see, the fees significantly outweigh the gains initially reported. This breaking update confirms the systemic pressure. When we look at the claims data, it's clear the next phase is purely about survival. We have a breaking update on the recent market activity. Our analysis shows normalized gains are outweighing the fees. This cultural evidence strongly supports the system argument. Now for the crucial pivot, analyzing the strategies for survival in this environment. A little bit harsher. The timeline clearly shows the fee structure against the gains. Once normalized, the data tells a different story. We can officially cross the rogue trader theory off the list. What we're seeing instead, looking at this death culture diagram, is a systemic issue. We have a breaking update. We've normalized the data, and when we look at the gains versus the fees, it's clear the previous rogue labels are. When we analyze the cultural data against the order book, the system argument is clear. The key metric now, looking at these vault claims, is pure survival. Please. We've uncovered new details in the filings. As you can see, the fees versus the gains tell a clear story.
The data clearly reinforces the underlying system argument here. But the real question, as we look at the survival metrics, is how sustainable is this trend? Our investigation into the fee structures shows a clear normalization. The previous rogue concerns have been addressed in the new desk culture guidelines.
The cultural evidence strongly reinforces the system argument we discussed. This leads us directly into the critical topic of survival in this market. And we've uncovered a fascinating trend in the latest filings. The shift from a rogue environment to this normalized structure is clear in the chat data. The cultural evidence here strongly reinforces the systemic argument. As we pivot to survival, the critical question is how many ounces are truly left in the vault?
As we recap the morning, the data clearly shows a sharp uptick in trading volume. Now, coming up after the break, we'll dive deep into the regulatory changes affecting Q3 projections.
All right, quick recap on the order book data. The vault saw massive inflows despite the recent sell wall. But before we get to the end game and the final ounces, let's look at these claims.
The exposure stacks are rising rapidly. The sell walls are massive, but the available float is draining fast.
The order book is flashing green, but watch the vault.
Claims are spiking, moving thousands of ounces. Next up, the critical resistance levels you need to know about. Let's look at the data. Despite the rising exposure stacks, demand arrows are pulsing green. The real story is this countdown bar and the rapidly draining float gauge.
The key takeaway is the unprecedented volume hitting the order book wall. While the vault saw significant claims, the sudden spike in cancel orders changes everything. We'll break down what this means next.
Let's look at the charts. The vault claims are spiking even as the available float drays. This sell wall indicates significant resistance moving forward. This is a critical update on the vault claims.
The order book is moving fast, and as we emphasized, time is the resource. Look at the speed of these ounces being processed.
In today's market update, we're seeing strong demand arrows pushing against these deepening sell walls. The float gauge is dropping rapidly.
So the key takeaway here is the unprecedented volume in the order book. We saw a massive influx of claims yesterday, nearly doubling the vault.
We have a breaking update on the recent volatility. The sell walls are massive, but these demand arrows suggest the available float is drying up faster than expected.
Quick recap on the vault claims. We are seeing major movement in the order book. If this wall breaks, we could see thousands of ounces hit the market.
And close. We have a critical update on the market data. The exposure stacks are climbing, but watch sell walls. The key takeaway here is time is the purchase resource, folks, and as this countdown shows, it's evaporating fast.
The walls are going up, but look at the rate of cancellation.
As exposure stacks rise behind this shield, we're seeing massive sell walls appear. Look at this. The backfire is clear. Lower prices are actually increasing the physical buying. As you can see here, the available float is draining rapidly.
Welcome back to the update. As you can see, the exposure stacks are rising rapidly. The sell walls are massive here, but watch the available float drain as demand continues to push through.
This is fascinating. The lower prices are causing a massive spike in physical acquisition. As you can see here, the available float is rapidly draining.
Breaking update here. The exposure stacks are rising fast, highlighted by this shield icon. And look at the demand arrows as the float gauge drains completely.
The key takeaway: despite the canceled order book wall, the vault claims remain high. We're seeing significant movement in the ounces, but next, we dive into what this means for Q3.
The bottom line is this: the surge in claims and the ongoing delivery stress are keeping premiums high. There's simply no way around the current constraints. The bottom line is this: the current pace of claims is creating massive delivery stress, and that's exactly why we're seeing these spiking premiums across the board.
This breaking update shows the reality on the street. As you can see, the paper claims far outweigh the physical silver in the vault.
Tying this together, the high volume of claims and the persistent delivery stress are the primary drivers behind these elevated premiums.
Look at this divergence. While the claims tower on screen continues to grow, the actual physical silver stack is dwarfed.
The bottom line is this: the surge in claims is directly impacting the delivery timeline, and that stress is driving these premiums higher across the board, as we've highlighted here.
We're seeing a massive divergence between the screen price and the street price. The paper claims are completely overwhelming the physical supply. The bottom line is this: rising claims are stressing the system. Until that pressure on the vault eases, we expect these high premiums to continue across the board. The divergence is clear. Paper claims now dwarf the physical supply. The delivery queue is growing, and they are pushing cash settlements instead of the metal.
When we look at the outstanding claims, the delivery stress becomes obvious. That's pushing premiums higher, but the physical constraints mean this can't last forever.
This is a breaking update on the silver market. The split screen shows it clearly. Paper claims are towering over the available physical metal. Tying this together, the claims are rising while the vault supply hits a wall. This delivery stress means premiums are spiking, impacting the final cost per ounce.
A major divergence between the screen and the street. The claims tower is dwarfing the physical stack, and the delivery queue is growing fast. Premiums are spiking. Patience. As you can see from the vault inventory, the stress on delivery remains high. We're seeing record claims against a shrinking order book. Welcome back to the market update. As you can see, the divergence between paper claims and actual street inventory is accelerating rapidly. So when we look at the outstanding claims and the stress on delivery, the premiums are reflecting that crunch. But let's keep this grounded in the current constraints. The data shows a critical divergence. While the paper claims stack high, the physical inventory is dwindling.
This ownership principle is simple. Claims are not the same as physical possession. When we look at the vault data versus the outstanding claims, the picture becomes very clear.
As you can see, the paper claims now dwarf the actual metal in the vault. And with this massive queue, many are facing mandatory cash settlement instead of delivery.
The bottom line is this: delivery stress is escalating, and that's translating directly into higher premiums across the board for these claims.
Breaking update on silver. The divergence between screen and street is massive. Paper claims are dwarfing the physical metal, and that delivery queue is growing.
The bottom line is this. Delivery stress and rising claims are driving premiums way up. The market is reacting to real constraints.
Let's look at this critical update on silver. The street price is pulling away from the screen price as the delivery queue surges. This is why the premiums are skyrocketing. Tying this together, the high volume of claims is creating significant delivery stress. This is directly impacting premiums. While the data suggests
There's a massive divergence happening between the screen price and the physical street supply. As you can see, the paper claims now dwarf the actual metal held in the vault. When we connect the claims data with the logistics overview, the delivery stress explains these premium hikes. It's a constrained market, and the charts reflect that reality.
there's a huge divergence happening between screen and street. The paper claims are completely dwarfing the physical supply.
The chain of logic is simple. The vault claims are up, signaling strong investor confidence despite the recent correction. That's your breaking update.
The divergence is stark. Paper claims now dwarf the actual physical stock in the vaults. And look at this.
The bottom line is this. Rising claims and delivery stress are forcing premiums higher. We are in a constrained market now, and that upward trend is set to continue.